Everything you've been told about chart patterns is a complete lie. And you are an idiot if you're not trading these 3 chart patterns on a daily basis that I've taught to over 10,000 traders. And I'm going to teach all of them to you in less than 60 seconds. Now, the first chart pattern that everybody should already know and should be trading is a simple bull flag. And by the way, this is all included in the app that you get with your membership, our pattern library. Now, a bull flag is a big, strong move up on high volume followed by a low volume period of consolidation. So you get this big move to the upside followed by low volume consolidation, then you trade that confirmation. So for example, here on QCLS just last week, you can see how I played it on the break of this flag. So let's break it down. Now, this is literally a perfect example on QCLS where it puts in place this range and then breaks to the upside. Now, the entry is not on that first candle ever, but as this next candle pulls back after breaking out and confirms a buyer off these pullbacks, stop loss goes at the bottom of the breakout candle, then you just trail stops off the 1-minute low until price eventually wicks you out. Next up, number 2, and even better, is VWAP reclaim. For example, you come into market open, that thing dumps, then it quickly reverses, gets back above VWAP and confirms off that pullback. Just like you see in our example here, price hops over VWAP, pulls back and confirms off of VWAP, stop loss goes right there under VWAP, and then of course the same thing applies, trail stops off the 1-minute low until momentum dries. This is actually a perfect example from my top stock today, IRBT, where it flushes off the high of day, reclaims VWAP, this orange line right here, puts in place that bottom, and then of course makes that next leg through highs. And number 3 is the simple opening range breakout. Now, an opening range is exactly what it sounds like. It's the range from the high to the low after market open, typically found in a 5-minute opening range breakout or a 15-minute opening range breakout. In small cap trading, it's typically a 5-minute opening range breakout. For example, here on LUNG, you have this opening range put in here. Look at this consolidation after market open that then chooses the upside direction. Stop loss goes again at the bottom of the breakout candle. And then just like the others, the stop loss trails the 1-minute low of the candles here as price moves higher. Now, there are 3 other setups in the pattern library that I trade every single day, but we don't have time to go over all of them. So make sure to join the 7-day free trial. Go to the pattern library, study them, check it out, and get ready for tomorrow. And let me know if you trade any of these setups already on a daily basis and which one's your favorite.